Well, first of all, I think people should have been worried about inflation for quite some time because the Federal Reserve and other central banks have been inflating for years. It's just that a lot of that inflation was moving into financial assets. And so a lot of people don't necessarily consider inflation a problem when it makes their stocks go up or it makes their house worth more. Although if you're planning on buying a house, the fact that house prices are going up is not a good thing because now it's more expensive for you to buy a home. But I think one of the things that has been helping to offset the inflation has been increases in productivity, outsourcing, the fact that America was able to rely on lower cost imports to replace a lot of the goods that we used to produce ourselves. And so that kind of kept a lid on consumer prices, even though the government was creating a lot of inflation. Of course, absent all that inflation, consumers would have benefited from lower price goods. So the government robbed them of that benefit through inflation. But they've now created so much money. The inflationary pressures are so great that it's overwhelming those other factors that were working to restrain prices. And I think that America's ability to rely on foreign producers for all the things that we don't produce is really getting strained. I mean, looking at the congestion in our ports, we really don't even have the capacity to import the amount of stuff that we now require, nor do we even have the infrastructure to unload it and transport it around the country. But I do think that you're going to start to see a big increase in the cost of imports. And so inflation is really going to start to manifest itself in a very big way. And it's going to be a huge problem for most Americans. Well, inflation has one cause, and that is the central bank, because inflation literally means to expand the money supply. It's money supply that is being inflated. So that's where the word comes from. Prices go up as a result of inflation, but rising prices in and of themselves are not inflation. I mean, prices can't inflate, right? Prices don't expand. They go up, they go down, but they don't expand. It's the money supply that expands. Of course, it never contracts. That would be deflation. We don't get that. We just get continuous inflation. But what drives the Federal Reserve to print so much money is government deficit spending. So the U.S. government spends a lot of money on programs that it uses to buy votes, but it doesn't want to tax the voters because then it might lose their votes. So there's a big gap between what the government collects in taxes and what it spends. And the gap is filled by the Fed that prints the money so that the government can pay its bills. But that doesn't mean that America gets all this government for free. We still have to cover the cost, except we pay for it with inflation. So inflation is like a tax, and it means that our cost of living is going to go up because the government isn't taking our money, it's taking the purchasing power from our money, and therefore we have to pay higher prices. And because we don't have an unlimited amount of money, we can afford to buy less stuff when the prices are higher. And that's basically the same thing as if the government had just taken our money from us and then we bought less stuff at the same prices. They leave us our money, but prices go up, so we end up with less stuff. The Fed should not have funded any of those programs. In fact, we shouldn't have had any stimulus with the pandemic. We needed the opposite of stimulus because the pandemic involved a lot of people just not going to work, right? People stopped working, and so they were no longer performing services or helping to produce goods. So the economy was contracting. The last thing a contracting economy needs is stimulus because you actually need to contract the money supply along with the economy. But if you just send people home and then say, hey, don't stop spending money, so we'll print up money and give it to you, that's a disaster because they're not earning money anymore. So they have to reduce their spending. So what we needed during the pandemic was for people to spend less because they were earning less. But we made the mistake of saying, look, go home, don't make anything, but keep on spending as if you still had a job, and here's the money. And now we're experiencing the adverse consequences of that in massive increases in prices. So the government did the wrong thing. Now, of course, had the government done nothing, the recession would have been deeper and longer lasting. And the bigger problem is that Americans had no savings. I mean, when Americans stopped earning, they had no money to pay the rent or to buy groceries because they lived paycheck to paycheck. Well, why is that? Well, because the Fed keeps interest rates at zero and nobody saves, and the government has such high taxes, people can't even afford to save. So we have this gigantic government and 0% interest rates, and that's why the economy was so ill-prepared for the pandemic. I mean, it was ill-prepared for any crisis. It didn't matter what it was. I mean, we were a bubble in search of a pin, and we found one. Yeah, well, the Fed should not just taper QE, it should halt it right now, just stop doing it. Not just gradually reduce the amount of QE. That's adding gasoline to the fire. Maybe they're adding less gasoline, but you don't put out a fire by pouring less gasoline on it. You got to, stop that or put water on it. So the Fed has to go cold turkey. Just right now, no more QE. In fact, we need the reverse. We need quantitative tightening. The Federal Reserve needs to start selling treasuries and mortgage-backed securities. It has to let interest rates go up, and not just a little bit. They need to go up a lot. And of course, when that happens, the whole house of cards literally is going to come crashing down. The Fed has to let stocks crash. As I said, we kicked the can down the road. Now, that doesn't mean we're going to get away with it, because ultimately, the price that we're going to pay for not doing the right thing is going to be enormous, because we are going to have a currency crisis. We may have hyperinflation. And all of that is much worse than just letting the markets reprice to a realistic level and letting investors lose money and forcing the government to cut spending. If we continue until we have, hyperinflation, we wipe out everybody, and the losses are going to be far more painful for a lot more people. They should be worried. I mean, it's not like it's a guarantee or even the most likely outcome, because I think we still have time to avoid hyperinflation. But obviously, the time will run out at some point if we don't do something. But there is no way to avoid hyperinflation without a lot of pain. Now, of course, hyperinflation will be even more pain, but we have to be willing to bite that bullet and do it to ourselves rather than waiting for the crisis to do it to us. Well, monetize the debt is basically when you take the debt and you turn it into money. Like you print money and buy the debt. And so you expand the money supply, but that means more inflation. Because private lenders aren't going to want to buy U.S. Treasuries at low interest rates. Why would you do that? If inflation is 5% and the government says, will you loan me money at 2%, why would you do that? You're losing 3%. So the only way they're going to get the money is from the Fed. But the Fed has to create the money, has to print it. And now you're destroying the value of the money that exists because you're increasing the supply. And as you have more money, the money's worth less and less.